Beginner's Guide to Stock Market Investing in 2025. Investing in the stock market remains one of the most effective strategies for building long-term wealth. However, for those new to investing, it can often appear complex, intimidating, and filled with financial jargon. This guide offers a clear, professional, and practical overview of how to approach stock market investing in 2025 with confidence and discipline. Section 1. What is the stock market? At its core, the stock market is a platform where individuals and institutions buy and sell shares of publicly traded companies. These shares, also known as stocks, represent ownership in a company. By purchasing a stock, you become a part owner of that company, and may benefit from its success through price appreciation or dividend payments. Companies list their stocks on public exchanges such as the New York Stock Exchange or Nasdaq to raise capital for growth, innovation, and expansion. The prices of these stocks fluctuate continuously, influenced by company performance, economic indicators, industry trends, and investor sentiment. Section 2. Why invest in stocks in 2025? Investing in stocks offers several compelling advantages. Historically, the stock market has delivered superior long-term returns compared to other asset classes like bonds or savings accounts. Stocks serve as a hedge against inflation, helping preserve the purchasing power of your money over time. Many stocks pay dividends, offering investors a source of passive income. Stocks are relatively liquid, meaning they can be bought or sold quickly when needed. In 2025, key sectors such as artificial intelligence, clean energy, biotechnology, and financial technology are experiencing rapid innovation. For investors, this presents opportunities to participate in the growth of transformative companies shaping the future. Section 3. How the stock market works. To invest in the stock market, you'll use a brokerage platform. Brokers like Fidelity, Schwab, Robinhood, or Webull provide the tools you need to buy and sell stocks, ETFs, and other securities. Trades are executed through stock exchanges. You place orders such as market orders, which buy at the current price, or limit orders, which buy only at a specified price. These orders are matched in real time with sellers. Market indices, such as the S&P 500 or Nasdaq Composite, are used to track overall market performance. These indices are made up of many individual stocks and serve as benchmarks for how the market, or a segment of it, is doing. Section 4. Types of stocks. There are several categories of stocks that investors should understand. Common stocks offer ownership, voting rights, and potential dividend income. Preferred stocks provide fixed dividends but typically do not include voting rights. Growth stocks represent companies expected to grow faster than the market average. These stocks often reinvest earnings rather than pay dividends. Value stocks are considered undervalued based on financial metrics. They may offer more stable returns. Dividend stocks provide steady income through regular cash payments. Companies like Johnson & Johnson and Coca-Cola are well-known dividend payers. Penny stocks are low-priced shares that can offer high reward, but come with elevated risk and volatility. Section 5. How to start investing in 2025. Getting started is simpler than it used to be. Here are the steps. 1. Choose a brokerage. Full-service firms like Fidelity offer research tools and human support. Commission-free apps like Robinhood are user-friendly. Robo-advisors like Betterment or Wealthfront use algorithms to manage your investments automatically. 2. Open an account. You can choose between a taxable brokerage account or a tax-advantaged retirement account, such as an IRA or Roth IRA. 3. Fund your account by linking your bank and transferring funds. You can begin with as little as $100. 4. Choose your first investments. Consider starting with broad market ETFs like VTI or SPY to get exposure to hundreds of companies in one purchase. Section 6. Investment strategies for beginners. There is no one-size-fits-all strategy, but these are commonly recommended for beginners. Long-term investing. Buy and hold shares of quality companies over many years. This approach takes advantage of compounding growth and reduces the need to time the market. Dollar cost averaging. Invest a fixed amount at regular intervals such as monthly to reduce the impact of market volatility. Dividend investing. Focus on companies with consistent dividend histories. Reinvest those dividends to maximize compounding returns. Growth versus value. Growth stocks are expected to grow revenue and earnings quickly. Value stocks are considered undervalued relative to their intrinsic worth. Diversification. Spreading your investments across different sectors and types of stocks is essential for managing risk and increasing stability. Section 7. Key trends to watch in 2025. In the current environment, These sectors show exceptional promise. Artificial intelligence, companies like Nvidia and Microsoft are at the forefront of AI applications across industries. Renewable energy and ESG, investments in sustainable companies are growing rapidly. Firms like Tesla and NextEra Energy are central to this movement. Metaverse and Web3, innovations in virtual interaction and decentralized technologies are shaping a new digital economy. Biotech and healthcare, advancements in gene editing, personalized medicine, and health tech are accelerating. Staying informed on these trends can help investors align their portfolios with long-term innovation. Section 8, Managing Investment Risk. Risk is inherent in investing, but there are several ways to reduce it. Expect short-term volatility. Markets can fluctuate based on headlines, but long-term trends tend to be more stable. Diversify your holdings. Avoid putting all your capital into a single stock or sector. Maintain emotional discipline. Avoid panic selling or chasing hot trends. Stick to a long-term plan based on your goals and risk tolerance. Section 9, Essential Tools for Investors. Today's investors have access to a variety of tools. Stock screeners like Finviz and Yahoo Finance help filter opportunities based on custom criteria. Robo-advisors automate portfolio creation based on your risk profile. AI-powered platforms like Trade Ideas and AlphaSense offer data-driven insights for advanced users. These tools make it easier than ever to research, analyze, and manage your investments effectively. Section 10, Common Mistakes Beginners Should Avoid. Avoid these frequent errors. Overtrading can lead to high fees and tax consequences. Investing without doing proper research exposes you to unnecessary risk. Instead, focus on consistency and discipline. Final tips for success. Investing success is built on simple, time-tested principles. Start early to benefit from the power of compounding. Stay informed through reputable sources like Bloomberg or CNBC. Read foundational books like The Intelligent Investor or Common Stocks and Uncommon Profits. Be patient. Wealth creation takes time and consistent effort. Conclusion. Stock market investing in 2025 presents extraordinary opportunities for thoughtful investors. By understanding how the market works, applying proven strategies, managing risk wisely, and staying informed, beginners can build a strong foundation for financial independence. If you're ready to take the first step, open a brokerage account today and begin building your future with purpose and confidence.